This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. A surge in COVID-19 cases and the emergence of the Omicron variant will dent global demand for oil, the International Energy Agency, IEA, said on Tuesday, but the broader picture is one of increasing output set to top demand this month and soar next year. The surge in new COVID-19 cases is expected to temporarily slow, but not upend, the recovery in oil demand that is underway, the Paris-based IEA said in its monthly oil report. New containment measures put in place to halt the spread of the virus are likely to have a more muted impact on the economy versus previous COVID waves, it said.
Europe's gas storage levels could hit record lows by the end of the winter heating season due to an early cold spell and muted Russian flows, Gas Infrastructure Europe data showed, leaving consumers and companies with much higher prices for longer. Gas prices surged this week near to record highs seen in October, driven by cold weather, concern over possible disruption to Russian supply and delays to the new Nord Stream 2 pipeline. The benchmark front-month contract on the Dutch TTF hub climbed as high as €120 per megawatt-hour, MWH, on Tuesday, close to record intraday levels seen in early October.
Moving on to the top news in the energy sector.
HSBC, Europe's leading banker to corporate Asia, laid out its long-awaited policy on financing thermal coal on Tuesday, and said it expected all its clients to have a plan in place to exit the fossil fuel by the end of 2023. Coal is contentious for governments across Asia as they look to move away from the cheap and widely used, but carbon-intensive energy source to help meet a global commitment to cut emissions in the fight against climate change. Under its plan, HSBC will cut exposure to thermal coal financing by at least 25% by 2025 and 50% by 2030, although non-EU or non-OECD-based clients could be funded until a global phase-out by 2040, its sustainability chief told Reuters.
Environmental investigators have uncovered tens of millions of tons worth of illegally built crude oil processing and coking capacity in Shandong province, China's top oil refining hub. Shandong's industrial authorities are neither striving to curb the new illegal production capacity, nor making efforts to rectify the existing illegal capacity, the Ministry of Ecology and Environment, ME, said in a statement on Tuesday. At least 19 independent oil refineries, also known as teapot refineries, in Donggying City were found to have installed 60.4 million tons of annual oil refining capacity without government approval, the ME said.
Next, we have the top news in metal markets.
Aluminium prices fell on Tuesday after inventories in London Metal Exchange registered warehouses jumped, though losses were limited by expectations of robust demand and tight supplies in top producer China. Benchmark aluminium on the London Metal Exchange traded down 0.9% at $2,630 a ton in official rings, reversing earlier gains which took prices to $2,665.25, the highest since December 2. Aluminium has come off a lot compared with other base metals. It looks cheap given healthy demand globally, said Dan Smith, managing director at Commodity Market Analytics.
Gold fell more than 1% on Tuesday after a jump in U.S. producer prices fueled expectations for sooner-than-expected interest rate hikes ahead of the Federal Reserve's two-day meeting. Spot gold fell 0.9% to $1,771.76 per ounce by 10:17 a.m. Eastern Time, 15:17 GMT. U.S. gold futures dropped 0.7% to $1,775.10. U.S. producer prices increased more than expected in November as supply constraints persisted, supporting views that inflation could remain uncomfortably high for some time. We will now look at the top news in the agricultural sector. Most grain crops in the European Union have continued to benefit from favourable weather in the past month. Although a lack of hardiness could leave some plants vulnerable to frost, the EU's crop monitoring service MARS said on Tuesday. The buildup of frost tolerance has been generally weak in Central, Eastern and Southeastern Europe, MARS said, stressing the risk could be greater along the Black Sea where crop development has been delayed by late sowing. Sowing of winter grains was virtually complete in most of Europe by early November but continued for several more weeks in Romania, Bulgaria and also in non-EU neighbor Ukraine, Mars said in a monthly report.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.